morning, good afternoon, good evening, yWhales, wherever you are in the world today. So today is January 31st, 2023. Bitcoin is sitting right around 23,000. We've seen a really great rally, about $5,000, $6,000 over the last, kind of month, which was surprising. I think a lot of people expected, were hoping or thinking or the thought process, we'd see somewhere down around $11,000, $12,000 BTC. And in fact, it hasn't. It's really pushed forward. And in the wake of FTX and all the chaos there, it's just really nice to see a strong and healthy cryptocurrency market, which really kind of helps all the developers and all the entrepreneurs to be able to raise fund and gain interest and whatnot. So it's while we're not talking about Bitcoin today, we are talking about, blockchain technologies. And I've got Yael with me here today from SolidBlock. Yael, thank you so much. And before we get into, your current project and what you guys do today, can we go back in time and really understand how you got really so interested in blockchain and really your first experience of understanding that this is the future?
Thank you for having me, Jay. It's really exciting to be here. And I love the way you structure your podcasts, kind of getting into the background and getting into what the company is. It's the commercial part. No, just kidding. The podcast. Anyway, so my interest in blockchain came from my general interest in tech, and as you go through as a VC or as a private equity professional, which I co-founded a VC and I was a part of a PE fund, and I moved to Israel when I was 21 from the US, although I'm originally from Ukraine, but I moved from the US to Israel in 2005, and before I moved, I read the book, The Startup Nation. And so it explained how Israel has turned around from a great, very agricultural society, even with the kibbutz that everybody has heard about, into this tech empire with a huge number of startups on NASDAQ. It's like number 2. It used to be, maybe now it's number 3 after US and Canada. Or I don't know what it is today. Anyway, so when I got here, I started joining all these startup groups, and then you kind of go through the stages, and you had, social media, and I had a startup in that space, and then, you had other iterations of, health data, health AI, and just a bunch of different things. And when it got to blockchain, around, Bitcoin, and then iteration to kind of when the industry understood blockchain can be used for so many things, maybe around 2015, 16. At that point, I was a part of a financial group, a hedge fund that was creating funds of funds and doing structured products and all these really fun things, fun being in quotation marks, for many people in this industry and real estate and so on. And I was really playing an active role. And for me, it was very interesting. I got to learn about kind of risk of different portfolios and how, in fact, liquidity is created. Like, that's where I got this understanding of, in order to have liquidity, you have to have like a huge ecosystem involved. You have to have institutions and traders and, some places generating demand, some places generating supply, some things ensuring compliance, some things ensuring a platform for trading, which only is available to larger aggregated products like indices and ETFs and things like that. So I was, in fact, creating these indices and ETFs that institutions and traders would buy. That's kind of was a very, very institutional occupation of mine. And then when that fund went down, I was like, okay, I just want to get into blockchain, because that seems to be a thing that whatever I was doing over there, it seems to be like a perfect, more of a peer-to-peer, less intermediated space or technology or platform or whatever you want to call it, that would allow doing the same type of financial operations, but accessible to a lot more people and companies and opportunities. And even back then, I was thinking, like, how can we apply this technology to the greater financial world, right? So, and then I found my way into blockchain through consulting and working on a variety of ICOs, marketing. I had a marketing company and with 7 successful ICOs, sorry. And then I realized, like, okay, these ICOs, they're just selling, tickets to the train that may or may not run. And so how do we, securities are are here to stay. It's a huge market, private securities market, around, $20 trillion, I believe. And even bigger than the public securities market, if you're not including all these indices and things like that, or in derivatives, right? Just straight up stocks and bonds. And so at the end of the day, I was always thinking, how can we place these securities on the blockchain to capture liquidity? But I never thought that just if we put the securities on the blockchain, it's going to create liquidity by itself. Because that was part of the financial markets and capital markets for so long. And like, I knew that the only reason why these early ICOs had any liquidity is because two reasons. One is because of the hype, and two is maybe there is some, it's just like a startup. Amazon's going on the public market, the company's doing well, and there are very few of those, right? So that's kind of what my background is, deeply financial. I was also a part of some startups as an exec, and private equity analysis, marketing, but all part
Yeah.
of the greater financial.
And that's amazing. And I love the story because you understand. And I think that's the biggest challenge one of the biggest challenges I have with Web3 is we have some incredibly talented and just visionary developers that are working on amazing things, but they have no concept of how the world's economics work. To get to that trillions and trillions of dollars, there is massive safeguards. There's massive amounts of regulations. And there's so many people in Web3 just like go, oh my God, regulations and oversight. We don't need any of this. We're blockchain. And every day I read a story about exactly why we need regulations, why we need compliance, and not all of the regulations around securities are bad. In fact, most of them are there to protect consumers, as you very well know. Correct?
Yeah, absolutely. I'm with you there all the way. I think regulation poses some barriers, and it also poses opportunity in many ways. I think that with technology, securities regulation can actually move towards providing automated oversight. This is what was lacking majorly in most of these big scandals like FTX and other things. Instead of focusing on kind of AML, which has largely, I think, been resolved with so much technology, and instead of focusing on a lot of things that I think SEC is focused on, maybe just because they don't understand it, focus on oversight, like not oversight, focus on overseeing the operations of these ventures. Like you could have detected things early and prevented this massive disaster from happening. And I think that technology is going to go that way as well.
I completely agree with that thesis. And the reality is in the FTX and Celsius and other worlds, it's not that it wouldn't happen. It just would have probably gotten caught sooner or been able to be mitigated a little bit more. I mean, let's be clear, even in the TradFi world, the Bernie Madoffs and the Enrons and other things absolutely can implode and do. But for every one of those stories, there's hundreds, potentially thousands of others that regulators stopped before they got to that point.
It's absolutely, by the way, what failed there was the TradFi. The fraud was on the TradFi part. It's and the lending and arm's length transactions that were not properly recorded and things like that. And it's all on the TradFi side. The fact that they used assets that were crypto assets, it's just a coincidence, I would say. Not a coincidence, because there seems to be a correlation between the risk tolerance of entrepreneurs that go into crypto and possibly maybe a fraud, but maybe not, right? Because look at Bernie and all the other people. So yeah.
Well, fabulous. So, with all that background, and again, I got into blockchain right around the same time. I Bitcoin right around 2010, and then when Ethereum came out, and you kind of go, okay, well, now we have something that recognizes the concepts of big data, of all these large databases, CRMs, ERPs, and others that can utilize this technology very well. But fast forward, 8 years to where we are today, and talk about what you've built and how that's going.
Yeah, this is my favorite topic. So we have built with SolidBlock a platform that allows to record transactions of securities on the blockchain, which creates several opportunities. The easiest one is the tradability on the secondary market. That just does not exist today unless you go public, which doesn't happen with most assets, in fact, unless they're high tech and high value growth and so forth. You're not going to put a real estate asset on a public market unless it's part of a larger REIT, right? We talked about a structured product. And so that's the first thing, but that's actually, I would say, the lesser thing right now. The next stage is really to start collateralizing these securities so that they can be a part of the larger game of lending. That's really the game that moves the value of securities around and creates liquidity. One of the things that creates liquidity, because you aggregate a bunch of securities, private securities, and into a portfolio, and then banks or other non-bank lenders will lend against it. And we have some really cool companies here like TrueFi, Maple Finance that are jumping into the game to collateralize traditional assets on top of the crypto assets, right? And this is
love Sydney and Maple Finance, so they're fabulous.
Yeah, so that's the next step for us as well. After that, I believe that it will be the era of the structured product where we'll create different portfolios, indices. Some of that will be homogenous things like, let's say, real estate. But we've gotten requests for a full portfolio. Let's say, how can we structure it in a way that you can have private securities, but also public securities in the same wallet or maybe even in the same fund, and then maybe some commodities, throw some in there, right? And then, all of that you can basically put into a fund of funds, but usually it's homogenous type of assets that we can now list on a traditional exchange or on some sort of a platform like Morningstar, for example, or NASDAQ indices, or just as a private trust, and which will be available to institutions to play with when they need certain risk, right?
Yael, so would you mind going through the difference for the viewers between a listed and registered security and an unlisted security, and what the differences between those are related to this?
Sure. So Jay, there are a variety of traditional or compliant exchanges that have a license to trade securities, publicly listed. So, for example, NASDAQ, New York Stock Exchange, right? And so companies can list with them. We all at one point or the other through a retirement fund or maybe through Robinhood or Interactive Brokers bought some stocks, Amazon, Facebook, Google, and so on and so forth. Some of these exchanges also have a smaller kind of sub exchanges where you can get small, OTC type of securities. They're also publicly traded, and so that process is expensive. There's very high regulation that's involved. You need to have a prospectus and so on. And there is an alternative for that if you are a smaller company and you don't have $1 million to invest in that process, and you don't have an underwriter, which is basically some institution, organization that takes responsibility for the raise and does due diligence, right? If you just want to distribute whatever you have, your business, you want to distribute it to investors. It can be even an unlimited number of investors. You just want to distribute it to investors, then you have several avenues to do that through unregistered securities. They're still compliant under certain exemptions. And I'm talking about the US regulation here, but other countries have similar. And so one of the very popular ways that you can distribute these unregistered securities compliantly is through an exemption that's called Reg D. And it has different subtitles of different numbers that securities lawyers will know. But basically, the one that our industry uses the most, the tokenized real estate, the tokenized private equity, we will distribute, or issuers will distribute companies will distribute their securities to only qualified investors, accredited investors, right?
Yep.
There is, then they have to check. These are people that have certain income or certain asset level. You can also use crowdfunding. That's a very popular thing, right? You use crowdfunding, but you have to be a crowdfunding portal for that. You have to have a license. You have to also have certain procedures, and then raise up to $5 million. There is a way to raise up to $70 million with some mini prospectus and so on. So all of these things keep lawyers happy, employed, and rich. So now, in terms of crypto, why is there so much talk about like, oh, will they, like in the wake of FTX, will Ethereum be considered a security? Will Ripple be considered, this is a famous court case, of course. And, everybody that issues a financial product, which is what it all is, right? Bitcoin and, there's obviously an argument whether it's an asset, whether, it's a commodity, whether it's a currency, there's all these things. And then there's tests to check whether something is a security. And so in general, in the US, they just, just forget it. We're these tests are so complicated. We're just going to assume that all of this stuff is basically a security. And then they gave a few, exceptions. Bitcoin is just, they have nobody to talk to. So they're like, oh, well, whatever, we'll just let it
commodity.
Yeah. There's no one. Yeah. So, so that's it. So we're, our company specifically is dealing with private, unlisted securities, and it's a huge market, and it's
Massive.
going to be growing. It's called alternative assets. When it comes to like big institutions where your pension fund is sitting, they will invest in traditional, which is basically stocks and bonds, and then they'll say alternative, which is like real estate, companies, Bitcoin, and so on and so forth.
That's fabulous. And I really appreciate you taking the time and giving a much more thorough, and correct answer. There's the concept that there are a lot of, especially in crypto, there's a lot of tokens or NFTs or DAOs that act like they are a security, but they have nothing to stand behind them. So the difference between listed and unlisted is very helpful. And then you get into the entire just wasteland of chaos, of false marketing and international things. So thank you for that. So how does SolidBlock and you guys manage these unlisted securities and to create a marketplace for liquidity, which is why we're all here? Liquidity locked in these real estate deals is I think hundreds of trillions of dollars when you add up globally, the ability to without redoing your loans or anything else, that you can provide small amounts of liquidity and trading into so many amazing properties.
Right. Absolutely. So it's actually a very easy question, but a very complex answer. So let's start with by just I'll tell you what we do and how we do it. So if you have a property, and we work with large commercial properties mainly, let's say you already invested in it, built it, and then it's just sitting there, and you want to build a new property. Like, what are you going to do? So you can always mortgage it in some way, refinance it, and take some money out that way. And then there's always this equity piece that you're holding, or something that is still there. So you can go to your friends, investors, or put the offering together. This is what we're talking about. Issue a security, and basically sell them your economic interest. Sell them economic interest in the property, whatever dividend or interest or payout at the end of the period when the building gets sold. So you can basically transfer that to somebody who's willing to pay a little bit of money. They don't have to buy the whole asset, and they don't even have to commit to holding that piece of the asset forever, because they can now sell it on the secondary market to another individual, either over the counter, wallet to wallet, or in an exchange. Now, because there's a lot of compliance that allows these unregistered securities to exist, right? Otherwise, it would be chaos and mayhem and things resembling the ICO failures. And so we have to, at a platform level, facilitate that. Like, we have to make sure that everybody who buys these securities adheres to certain laws. We're talking about KYC, anti-money laundering, and know your customer, and so on and so forth. So that's on a very ground level what we do. to facilitate just very simply distribution, right? And a distribution.
Yep.
Now, is the fact that now, I don't know, 503 Park Avenue in Manhattan is going to be sitting on the blockchain with 20 or 30 investors, let's say, that bought into that property, and it's going to be, these sitting in their wallets, they're getting their dividends from the rent, and so on and so forth. Everybody's happy. Does that mean that all of a sudden there's going to be a huge demand for that property just because now you can buy it in easier and in smaller parts? Maybe, maybe not. Like, I'm not sure that people would prefer, once they already bought into something that gives them like 8% return annual, and it's pretty stable, and it is in Manhattan. There's, hundreds of thousands of buildings. And so, well, not in Manhattan, but all over the US. So will they sell that and buy something else? I'm not so sure. So how will we see this liquidity generated? Well, first and foremost, it's already revolutionary that I can even exit. Like, I can sell it to my neighbor, give it to my kids, use it as a collateral to get a loan. Maybe I won't sell it, but I'll, go to Maple or TrueFi or, here's the security I bought, collateralize it, give me a loan, which they'll give you like up to 75% LTV loan to value, right? Hopefully, if it's a good and stable security.
Because it is a regulated security.
It is a regulated security. Absolutely, they can take ownership of it and they can resell it. Because not only that it's regulated, it's also using the mechanisms that are legal and compliant to actually peer-to-peer sell this security to other wallets, right? Because otherwise you're stuck with it until the end of days. And if there is no promise of liquidity, you can't use it as a base for a loan, right? Somebody can't take ownership of it. And so in this scenario, because I'll give you another example, which I think will make everything clear for all the listeners or viewers. If you invested into a startup company, there are all these rules under which you usually cannot resell your holding to someone else. Like if you've ever invested in a startup, there's all these right of first refusal, like all these things and hurdles, because a startup doesn't want some person some investor to come and own a piece of it, because there are all these rights attached. What we're saying is that it's a passive investment. You put money in, now you're entitled to whatever everybody else is entitled, like it's passive income or this and that. And we don't care who owns it, with certain exceptions. Usually we want to put on a single wallet, which is usually traced to an owner, owning not more than 20%, right? So there's all these rules that prevent from like a hostile takeover type of thing. But we don't care who owns it. So you can use it in whichever way you want. Now, liquidity, though, is going to be generated, like I said, now that you have these electronic, really, products, right? Digital products. You don't need a lot to put them together into a trust. Like back in the day when I was doing this stuff, these had to be publicly listed. And then we had to be big organization, a hedge fund with licenses that had to buy up all these securities, hold them. We had to have custody license. We had to hold this stuff. Yep. Then we had to place that fund or funds into another vehicle in the UK, put that on an exchange, and as a result, you'll have and we, by having this digital token, we can do all of that in minutes and very cheaply. So now those products, imagine you have like 100 buildings that are, all give a certain return, and the data is there, meaning there's so much data, more data coming in on the blockchain, and it's all verifiable, and there's like a whole industry made out of it right now. You can use AI, all the famous Chat GPT and other things that right now everybody's starting to use to basically kind of analyze whatever is said and then regurgitate valuable insights and things like that, right? So imagine investors, they will keep getting these insights in a tangible form. They can understand, like this market's doing that market's doing that, literally on a minute by minute basis, because information processing is just so much easier. So
absolutely.
Right? Like think about that. Like what's gonna do when we combine AI, blockchain, and all the I wouldn't even call them chatbots. It's just like information generation and repackaging tools. Sky's the limit for individuals that want to trade. Why do you need to be an institution? Why do you need to be JP Morgan, BlackRock, and stuff like that? Right?
Well, a couple points on that is, number one, when people talk about being inclusive of, investors and wanting to be, more, have a broader reach into their investments, blockchain solves so many of these issues because there's no regional aspect to this. It's a global phenomenon. And in fact, it'll be, multi-planetary is if we ever, when Elon succeeds on going to Mars, there's no reason for TradFi anymore. And TradFi, I believe, will migrate to the blockchain. They have to. Because it's a cost savings for them. It's a security savings across the board, but it's still too early. It's still too young. But what you're describing, let's just pretend that 10% of the world's commercial real estate is it's in solid blocks. Congratulations, by the way, if that happens. But the concept there is suddenly you have the ability for investors that are sitting behind their desk, just like everyone listening to this podcast, that has the access to do their own research, to understand, they want this state versus that state. They want this cap rate versus that cap rate, where they can make decisions and have access to 100,000% more opportunities than they ever can in the world as it is today. Right now, you've got to call a broker, and the broker is going to tell you the X number of things that he's got listed. And if it's listed with someone else, then you're going to go call someone else, and you're going to have to do that over and over again. Blockchain means that you can work with unlimited amounts of brokers, unlimited amounts of investors, and focus in on what works best for your theses.
And brokers, I'm happy that you brought up brokers, because we are merging with a broker dealer so that we can do a lot more. And the brokers are going to play a very important role, because even now, for you, the disintermediation that's happening, really most people don't realize how much is happening behind the scenes in the financial industry. And that's what we're talking about when we talk about disintermediation. The settlement of deals today is done manually. Literally, people in the bank pressing buttons and entering numbers. There's so many mistakes made, and it's insane. Blockchain can do settlement, with a smart contract, even like automated settlement, right? With record keeping that is just so proficient and effective. So, but the financial industry has this whole servicing and collections and settlements and like all these crazy financial services companies that people don't even realize that what's happening behind the scenes, and that's why they're paying such high fees for everything, right? Now, the brokerage function of being able to market things and sell things is not going anywhere. In fact, it's becoming even more important, because with this wealth of products now that are available to everybody, who's going to bring them to the people? Like, how are you going to connect investors to? Like, if like, let's say Interactive Brokers or Robinhood, or even, let's say, Kickstarter, like, how do you find projects? Yep. Well, somebody's curating that stuff for you somewhere, bringing you on a homepage or whatever. There's always these affiliate marketers, of course, and marketers who will know how to find you, know that you really like Midwestern properties, or maybe you like space companies, space-related companies, and maybe you like self-driving cars and technologies. So they will know that that's what you like, and that's what they're going to bring to you. So at our next iteration, we are making a warehouse of like wholesale deals for brokers to tap into, and providing them with basically all of the compliance that they need to sell digital securities, and to even get commissions automatically through a blockchain-based waterfall. So that's basically where we believe is going to be the greatest disruption of the industry, when you'll be able to distribute so efficiently because of these brokers that they know how to sell, and they won't need to do anything else. They won't need to do compliance. They won't need to get bogged down on KYC and AML that they still do manually, by the way. So.
Yeah, and to give everyone an idea, in the United States, and I don't know what it is in other parts of the world, but in the United States for residential, we have the MLS, multiple listing service, which if you go on Zillow or Realtor.com, you can go see 98% of all the homes that are listed in the United States from any portal, and that's accessible through a realtor, a broker, a website, a marketing company. They all have this even kind of access that if you follow the rules, and you can kind of get into this massive database. It won't dive into it too much there, but it's pretty clunky and old fashioned. But in the commercial space, none of that exists. And even Crexy and some of these other ones, LoopNet, that are major large companies, they're still representing a fraction of the commercial industry, because most brokers, most owners, they're not required to list it anywhere, and quite simply, they don't want to. They like to keep them on the side of the market. It's not a technology forward industry in any way, shape, or form. So, moving this, going past Web 1 and Web 2, which is they're just going to jump right over to Web 3, makes so much more sense than trying to go back to yesterday's technology to say, well, we're going to give gated access to our internal servers.
Yeah. I think that's right on, and I think in general also we might want to a little bit sharpen the understanding of like Web3 and actually Zillow and other websites where there are listings happening. Some of that is moving, let's say, to the metaverse, which is a better enhanced experience of, I guess, being able to review the products and properties and so forth, which I think is important, especially if you are buying a place where you want to live, or maybe a place where you want to invest, because you can get to feel it. And, it's kind of like, I'm actually hoping that will happen to like grocery stores, because I'm still not 100% on kind of buying groceries online. And I don't feel like a hunter gatherer, when I put tomatoes into my basket online. So, but that's basically what the metaverse is doing. It's kind of like providing a more intuitive interface and more interactive and things like that. And it's a part of Web3, as in blockchain enables that kind of experience, right? Which is kind of a little bit different and blockchain is just technology, and it can enable so many different things. And blockchain enables finance, which is not really in my mind kind of a part of the Web3, because that web is just the way that information passes through, right? Although we will, of course, we talked about the way information, and I'm wondering Web3 and ChatGPT, like that's going to go nuts, right? So that's all connected anyway into
and AI, it's the hottest thing going right now, because and AI is not a new technology. It's been around for decades at this point, but finally there's been a breakthrough of which, same as everything else, finally there's a use case that people resonate with, and it works, and you don't have to be a programmer, and you don't have to, it just, natural language is where it is. But to me, I've always said blockchain is not designed for humans. Blockchain is designed for computers and for AI. We can navigate it, we can do it, but the concept is that being able to direct an AI that you own, or that your company owns, and direct these bots, they need valid sources of that are immutable, that are trusted, validated, and verified, to be able to give you back any type of results. And scouring Google, scouring the open web for these means you just read a bunch of articles that could have been written by anyone anywhere else. So blockchain is a really amazing, kind of merging point for AI.
Exactly, like a validation, like Wikipedia, right? Like, sometimes I definitely have to check different sources if it's an important information for a report and stuff like that. And you're right on, like, you don't want to double check things, and if you want something to be usable in a very secure professional setting, right, where it's much more than a toy. But yeah, blockchain, we're still going to be surprised by blockchain, and it's one of those technologies that just keeps on giving. There are very few baseline, they call them picks and shovels. I guess picks because you kind of destroy things, and shovel is, you dig, I don't know. But these are kind of infrastructure technologies that will give rise to a lot more things, and blockchain is one of them.
I love that. So what's kind of the next phase for SolidBlock? So you've talked about, kind of expanding a little bit, and you're including more institutions, brokers, and whatnot.
Yeah.
What's kind of the next big hurdle that you need to overcome?
So our vision is distributed investment banking, and that will allow instant transaction closings, I would say, if you have to raise a large amounts of money through collaborations of different indicators, brokers, and so on, who will quickly, who will figure out who to distribute it to, join deals together, and so on and so forth. And the reason why I think is the next big thing is because a lot of industries have undergone this process with the rise of the internet, right? So the internet was the catalyst for affiliate marketing of things like sneakers or, pretty much every product. That's why, let's say, Kylie Jenner got so popular and then a billion-dollar entrepreneur, because she knows how to use social media, creates a decent product, and has a bunch of affiliate marketers, right, who will resell and get a commission. Now, in the securities industry, you cannot get a commission unless you're a broker. And as a broker, it's very difficult to collaborate with other brokers because there's so many rules. And so this type of marketing of securities was just impossible. You can do a 2-level, right? You can maybe hire, if you're a guy who was hired in a deal, maybe you're busy, so you're going to hire another guy or a girl. And then that's it, right? You cannot have a bunch of different layers. You cannot hire 10 people, you could, to help you out. And so that just was not a way to distribute. And so only the big investment banks are really good at distribution because they have big networks, and they can take a lot of money for it. And they will only take products that are very big. Now, with our setup, smaller products will get distributed, right? If you only have a $10-20 million deal, maybe even a $5 million deal eventually, you'll be able to join, as opposed to right now when nobody cares if you have, if you go to a VC, some certain VCs or institutions, as a startup, they're like, we would love to, but we don't have a mandate to put less than $20 million in you. And so that's how things are. And we're going to change that. We're going to change the way money flows, change the need for intermediaries in the markets, and as a result, create a much more efficient way to distribute private securities and money. As a result, liquidity should be cheaper, especially in situations when there's crises, right? Hopefully, we're kind of getting out of one. You mentioned the Bitcoin going up a little bit unexpectedly, as we thought it might go down. But the truth of the matter is that the markets are improving. When the markets are improving, all of a sudden exits happen, and there's a little bit more money. And then where do people put that money? Well, they're looking for their other investment, well, in the most liquid assets. So Bitcoin is going to benefit from any sort of like a jump in the market, in my view. So we're benefiting from it, and let's hope that the markets will continue to recover until the elections at least, and take advantage of this opportunity. Sorry, none of this is investment advice.
No investment advice ever on the show. Yael, really amazing conversation, and I love your insights and your eagerness to correct me on some incorrect terminology that I have here. And so I really appreciate that, because education is one of our top challenges that we have in this industry. People say that they understand cryptocurrencies and blockchain, and then you talk to them for a few minutes, you realize they have no concept of what's actually occurring. Just because it's on blockchain doesn't mean that it's the Wild West and you can do whatever you want, wherever you want. There are still rules that have to be followed. It's a new technology, just like MP3s and peer-to-peer kind of helped Napster to become the evolutionary gateway to Spotify and Pandora and Apple Music. We're seeing kind of the initial concepts of the early EVM chains like Ethereum and others that are now giving the rise to companies like SolidBlocks and giving you guys the ability to scale and grow in ways that would have cost tens to hundreds of millions of dollars in the past to have the levels of access and the levels of kind of security and distribution that you have today. With that all being kind of said, and we understand that, where do you see this industry and this asset class going, that you would give, kind of thoughts to other entrepreneurs that are in the space, kind of wondering where all this is going?
Sure, Jay. So we talked about how blockchain is the picks and shovels type of technology, which is used for a variety of things. And I would say it has 3 primary functions. Obviously, it's a ledger, so you record transactions. Anything transactional Number two, I would say, so beyond the transactions, you have the capability to collaborate and bring data in. So it's still a transaction, but not necessarily the process of moving of one asset to between different places and wallets, but actually being able to aggregate a lot of things from different parties. And so I think these are kind of like the two main attributes. And maybe the third one is value, is being able to value things easily. So let's think about different ways to bring that together into one, into kind of a direction for new entrepreneurs and people that are sitting there, developers that are saying, well, I know how to do AI, let's say, and, I've been dabbling in smart contracts, or I know, language processing, or I'm taking a course in machine learning and I do this, or maybe I am a mechanical engineer. What can I do? Or maybe I'm a pharma exec. I'm not even a dev, right? I just see so many problems that I want to solve. So people that that look at this from the problem perspective instead of the solution, kind of, okay, where can I now apply blockchain? They will reasonably find that to improve existing networks and processes that are already based online and data collection and AI, most of these places blockchain can really make things more efficient, right? So in this case, you wouldn't be wrong by saying blockchain can do this better, right? I would not necessarily look at things like, e-commerce, although that I've seen good, also good solutions there. So I shouldn't say, but I would not necessarily look at kind of like things that were popular back in the day is, again, these tickets to ride sort of things, like, okay, let's put blockchain in so we can raise some money through the blockchain and put a token. So I think that kind of is past. And the technology has evolved into a tool that makes things cheaper. The transactions, the aggregation, gives permissions, right? So we're talking about permissions. Let's say we have a bunch of pharma companies that want to trade patents or technologies, right? So that's still not solved. Even the records on the blockchain for hospitals are not solved. Why? Because of the UX. If you are a UX specialist and you're so good at making things simple, right? Then
yes, please.
We need you here and also I would advise, just in general, don't try to move any corporate to a new platform and make them change the way they're doing things. It's super difficult. Make them change one thing that is so painful to them and they hate it. Like in our case, for example, brokers hate doing KYC, ML, hate all this manual work. Give me that. If I told them, just move to our platform, from now on, you're going to do everything on them, they're going to be like, forget it. So just change a little bit, make enough value so that later on you grab even more and more and more and more of what they do, right? If they're your client, know your client so well. And blockchain, by the way, and a lot of entrepreneurs tend to jump industries. Today they're going to do this, tomorrow they're going to do this. In my mind, I think it will not take you no less than 3 years to really, really learn your customer and the industry. Like, that's why I really like people that kind of worked in something like, let's say, automotive engineers for 20 years, and then they create a startup. And then they're like, okay, now they know everything in and out, and they got this idea how they can use new technology because they, that came on the scene. Tech is what changes. The industries take a really, really long time to change.
And I completely agree with everything you just said, because I want more people that have institutional knowledge of the way it is today and solve the pain problems that we already have with the existing systems that are already in place. So I love that concept. And I realize that we wrap this up. I love that you are attacking commercial, real estate, which is very different than residential real estate. I own a residential brokerage, and we've come across a couple titles that have been, migrated to the blockchain. Let me tell you, the first thing that happens when we have a buyer interested is we have to undo that, because there's no lender, there's no, you title won't process it. And so the concept is sound, like, sure, the title's there and you can find it all on chain, but if there's no marketplace, if it's not an accepted marketplace and you're not following the regulations that the existing industries have, you've created a solution to a problem that didn't exist. So I really love, what you're doing with SolidBlocks. I love everything that we just talked about, and I thank you so much for the time. If people are interested and want to learn more, what's the best way to find you?
So solidblock.co is a place, and I am, Google Yael Tamar. You'll find me on Twitter, LinkedIn, whatever platform I exist on, and I'll always answer and talk to anybody who's interested in kind of joining us. And we have now we actually have a big opportunity for any brokers to come and join us, and for any investors to come and join us. So let us know what you'd like to do, and we'll collaborate. Love it.
Fabulous. yWhales, this is Yael from SolidBlocks. Highly suggest checking out the platform and really following along. You guys are doing some great updates on LinkedIn and others. So thank you for the time, and we'll see you guys next time.
Thank you for having me, Jay.
Anytime.